And as always, we're going to be looking for accurate context with risk management and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. It is Tuesday, December the 14th. I'm John Hoagland. Thanks for trusting me with your time as always. Hoping if you're in the markets, you've got things going your way. As always, seeking good context, risk management, and always remaining patient in our trading today. As far as economic numbers this morning, where I'm sure we're all aware that the Fed meeting is beginning today. 7:30, the PPI final demand came out above forecast. They were looking for 0.5% in November, came out 0.8%. All of the PPI numbers came out higher than expected. So obviously, inflation is probably not going anywhere soon. Just a reminder, keep praying for those in the path of the storm and tornadoes in the Midwest. They're going to need our help for a long time. On the mind of traders, and myself included this morning, U.S. stocks are starting to feel the pressure as the FOMC meeting begins against the backdrop of inflation that's at a 40-year high. Futures obviously set to open lower and accelerating lower after that PPI number. Meme stocks are even feeling it. Cryptos also kind of feeling it as well. As far as crude is concerned, the IEA, International Energy Agency, has cut the forecast for crude oil by 600,000 barrels per day through quarter one. There's going to be a little bit of a hint of perhaps oversupply. We'll be watching crude oil for reactions to that. Other than that, market's already moving. I don't know if we're going to have the ability for our bigger traders to be able to just get their positions in order, get themselves nicely hedged for the FOMC meeting tomorrow. I was kind of thinking we'd have some couple of quieter days here, but it does not seem we are going to have that. As always, make sure you hit that lucky like button. Share, comment, question, feedback, and heckling are always welcome. Subscribe to the YouTube channel so you can get notifications when we do go live. We're going to be talking today in the Coach's Playbook at 11:30 about our predictions as to where these markets were going to be at the end of this year, and maybe set a couple of predictions for next year. These are fun. I'm kind of surprised at how poorly I did. Didn't even remember what I came up with, but apparently we do have a winner. We'll find that out at 11:30 in the Coach's Playbook. The VIX up 3% last I checked, and that was before the 7:30 number. We're at 21. I would imagine it's a little higher than that. Let's take a quick look and see if I've got that quote. Yeah, so up now about 6%, 21.55 after the numbers. The dollar index slightly lower, 96.22, and the yield on the 10-year slightly at 1.425. As always, got to say good morning to everyone. Zerain from France, thank you for checking in. Zerain, you're the first in the room, and you win the prize. Charles, my brother Rick, again channeling his inner Matthew McConaughey. All right. Isaac, good morning. Brody from the Olympic Peninsula. Robert, Chris, good morning. Jimmy, Brian, Alfred, Terry King, Kevin, Guy, Andres, George, good to see you. Tone, good to see you. We got a PPI, boom, yes. Norman, good to see you. George, Emmanuel Cesar, Ray, back with us 2 days in a row. Always a pleasure to see you, Ray. Mo, good morning, Jim, Rob T, Eric, Devante, Jerry is awake. I hope I am too. Good morning to you also, Drew. And so, yeah, we've got markets on the move. Things heading a little bit lower, it looks like. Juan, good morning to you as well. Sarah, good morning. All right, I think we're in pretty good shape here. I think we should jump into the charts and see if there's anything cool we can see. Now, there were a couple of situations yesterday that I was really excited about that just did not pan out the way my original hypothesis was looking at. Equities were one of them. Nat gas was the other one. We're going to see how those things played out for us yesterday, how we may have been able to change our minds. It's so important to remember to trade what we see, not what we think, because I would have had a real bad day yesterday had I stuck with the guns that I originally thought, instead of being creative and understanding that the market was telling me something different. Pascal, good morning. Wen, Trading Research, good morning. So, a little bit of vision and flexibility saved me from having a real bad day yesterday. Hopefully, we're going to be able to do the same for everybody today. Of course, we are looking for a good trading day, profitable trading day for everybody. It just is part of the business that we don't get to choose that we have to really accept some losses sometimes. All right, let's jump into the S&Ps now. I think we can probably get through the S. And the Nasdaq before we get to the crude oil opening. Let's give that a try. As always, let's take a look at the daily here in the S&Ps. We had a chance to open above the weekly kickoff high yesterday. We had a late spike, which is one of the kind of early expectations or early hypotheses. We're going to see this on the 30-minute chart. One of the early hypotheses that I was expecting to happen yesterday that just did not pan out. So there was a late spike failure, big downside opportunity. Open interest, we added 12,000 in open interest yesterday, but it's still somewhat rollover blurry. We're going to expire on Friday, quadruple witching day, and we're probably going to see about 500,000 contracts expire and settle in cash. It's what the norm has been, right about that. So we still see open interest building. We'll see that drop in open interest after expiration. Excuse me. And then we'll be able to get back to reasonable expectations of what we're seeing in volume and open interest. So open interest still rollover blurry. Inflation pressures on Fed policy increases. We're going to find out tomorrow at 1 o'clock what they're thinking about doing in the near term and talking about what changes they may be doing in the medium term. We've got right now a breakout of our 4-day range that we should be going with, but this happens in overnight session, way too much for my liking. It's going to be a little bit more of a challenging trading day. Take a look at the 30-minute chart. So here was our late spike on Friday. Had some pretty big expectations of opening above the late spike. It did not pan out. The market could not hold 47.09 weekly kickoff high. We opened lower, and then we left the opening range at the dead high of the session. That was the first warning sign that we may not get our expectations with the late spike. The market couldn't hold above weekly kickoff, opened in the late spike, leaving the opening range at the high of the session. Couple of warning signs there. The market tanked, basically went through value from Friday and then settled lower. Now we're seeing the market even before the open breaking out below this area of balance here. This blue area here is the gap that was created on the big up move that we had last week. Now we're back in that gap. So, a gap fill from the past seems to be somewhat in order. It's going to be a difficult trading day. It's going to be hard to find good trade locations because we're already in an area of space. Expectation might be to come back and close this gap from last week. We've got weekly kickoff low just below that, 45.86. And there's plenty of visuals down below last week's low. And then below that, we've got lots of gaps, lots of naked points of control. If the market is going to get that ugly, we don't know if that is going to be the case for sure. My job is, all right, what am I looking for? How am I going to manage risk? How am I going to look for cheap opportunities? I may have to wait until the market opens up. I'll watch, of course, the opening range, 830 to 831. If the opening range leaves information, as in it's the high of the session or the low of the session, that might be a first cheap opportunity for me to get into the marketplace again, depending on the size of that opening range. Let's take a brief look now at the Nasdaq. Nasdaq is and has been presenting as a little bit weaker than the S&Ps. We had weekly kickoff resistance yesterday. We never traded much above it, if at all, for 13. We were within 7 points of it. Couldn't get to it. Resistance. Remember, these weekly kickoff levels are not meant to be envelopes for weekly activity. They're meant to be indicative of when the longer of an area where the longer time frame, I'm making the hypothesis that they're going to adjust inventory. We couldn't hold above it in the S&Ps yesterday. We had probably had a bit of an inventory adjustment in the long time frame. Same situation yesterday. We drove away from the weekly kickoff level one way or another, this particular way to the downside. Again, feeling the Fed pressure rollover, still blurry, remains in volume and in open interest. We added 3,700 in open interest yesterday. Can we make the assumption that some of those are new sellers? We can make that assumption. But again, we're still largely in rollover. And until expiration, there's going to be a little bit of a blur to that information. All right, so overnight shorts, gap rules. Here we go. And Charles is noting something somewhat important. Does this create an island top? Yes, it does. And it does also in the S&Ps. Here's the S&Ps. So the market comes up to it. We have a gap. We've left a gap, an island top. Potentially a very serious reversal pattern. Something I was going to bring up. Thank you, Charles. So we are potentially creating island tops in the S&Ps and the Nasdaq. Here's your island top. It's difficult to see when you are including the overnight sessions. Now, the market did come up to it. It's not like an island top up here, but still it's created a gap to this level and a gap away from this level. We may see some continuation to the downside. Okay, let's go back now to the crude oil because we're getting pretty close to the open. Rollover range remains, but we're at risk of breaking out of this rollover range when we have range-bound activity. Island top, Devante, is yes, bearish. Island tops called island tops because you can buy the ones you can buy after trading them. You can buy an island. Well, that would be nice, wouldn't it? It's probably not going to be that simple. We had an island bottom. We thought we did yesterday in the natural gas. We'll see that here shortly. But here's the daily in crude, adding 5,600 in open interest yesterday. Again, we're a little time before expiration here. Actually, we're going to be trading the February contract probably tomorrow, if not Thursday. We're in rollover, so that open interest is a little bit blurry, if you will. Range bound rules. If we stay range bound, we're going to be fading the extremes, looking for moves back to the middle. This may be a bit of a change for us here. Let's take a quick look at the 30 and see what we've done with the opening range here. We're just hitting it. Overnight inventory to the short side. We've got a gap lower. And what's that? Potentially another island top. There's islands all over the place. They should be relatively cheap to buy. However, we've got in the day time frame, we're going to be watching to see if this gap cannot be closed relatively early. Here's the first minute of trade. So we've left the opening range at the high. Okay, the opening range, 16 ticks. Man, oh man, this is a good one to try and catch. If we get the opportunity back at or near the opening range, it's a worthwhile opportunity for us to look for that sale because it's going to give us that cheap opportunity. Remember, we've opened with a gap. If we can't close the gap relatively early, we trade in the direction of the gap. Right now, we have created an island top. Let's take a look at gold now. So we have been very range bound. We are at risk of breaking that range bound activity. 1770 is weekly kickoff low. That's another one of those levels where I'm going to be looking for help from longer time frame traders, where longer time frame traders may need to or want to adjust inventory, bringing bigger players into the marketplace. And we added 5,600 in open interest yesterday. Now, there were a couple of days last week where we had less than 200 changes in open interest. But since then, every day we've been adding open interest. There is more energy in this market, which leads me to believe that a breakout outside of this area, if it is accepted, offers a bigger opportunity. More energy, bigger opportunity. So while we are in this area of activity, we're in short time frame control. We can show you day after day where short time levels have been respected. There may be a bit of a change to this now. We've got the market at an extreme. So if we can accept below this weekly kickoff level and last week's low, we are certainly looking like we may have some energy to the downside. Take a look at the 30-minute chart. Well, alrighty then. We did leave the opening range at the high of the session. I didn't have the opportunity to mark that on my charts yet, but here's what we're looking at. We opened in range. Actually, we opened with a slight gap, I think, and then we left the opening range at the high of the session, which tells us right away sellers may be in control. Now we're looking at another situation where we are potentially breaking out of this range-bound activity we've been in for a couple of weeks. Now I was going to go through and show you how short time frame levels are often respected. Yesterday, the previous day's high, short time level respected. The day before, value area low respected. The day before, point of control or value high, relatively close, somewhat respected. This day, range inside value. short time frame respected. This day, the market opens, point of control, short time frame level respected. This day here, value area, well, the high of the previous day's range respected. Value high, somewhat respected. So now we're in a situation where we may see the market disrespect short time frame levels and adhere more to this important inflection level at 1770. We're seeing this market continue this push to the downside. Interesting stuff. To the euro is still very range bound. Not seeing the same kind of activity we're seeing gold here. Oops. What did I do? I think we're still all right here. We had our bull flag, which we had a pretty good breakout on. That was a nice trading day, but we're still inside that entire trading day. We have not moved. Balanced, range bound, consolidating, pandering, whatever you want to call this market state, it is range bound. We did add 13,000 in open interest yesterday. Again, somewhat of a rollover function. Open interest, still rollover related. So we're looking for short time frame levels to be respected here. 30 minutes. The market open with a slight gap. We've closed the gap. Look at the high from the overnight, the high from the day before last. We'll look for the market to continue to push into yesterday's range. If it comes into yesterday's area of value, there's a good probability it may trade to the other extreme of value. But again, we'll be looking for the short time frame levels in the meantime to look for opportunities to limit our risk. Okay, the market opened above, closed the gap, showing acceptance inside yesterday's range. See if we find acceptance inside yesterday's area of value. That may bring us to a move to the low of value from yesterday. But again, short time frame levels rule. Okay. The 10-year. We're going to see a lot of posturing and hedging for the FOMC meeting tomorrow. We've been pretty much range bound over the last, since the beginning of October to a couple of months. We've been largely range bound. We're still in the teeth of that range bound activity. Open interest has been trending higher over the last few days, adding another 14,000 in open interest yesterday. But again, still finding this market to be range bound and short time frame controlled. Yesterday was a pretty decent move to the upside, a bit of a surprise, I would think, considering what the FOMC is going to probably be talking about raising rates in the near future, not right now, but definitely in H1 of next year. So let's take a look at the 30-minute chart. Gap closed. Acceptance inside value. We opened outside of range, outside of value. Gap inside value, value area special situation, which means opening outside of range, accepting back inside value could bring us to the other extreme of value. That would be a pretty big move. Settlement, we've got overnight shorts. This could be quite simply an overnight inventory adjustment back towards settlement. Point of control. Very toothy profile yesterday. Toothy and emotional this is the natural gas. What am I doing? Somebody wake me up. So here it is. Opening in range and in value. Some overnight shorts looking like they've adjusted inventory back to settlement already. Going to be depending on if this market holds value from yesterday or rejects value from yesterday. My goodness. My goodness. All right. So value low, I think, is somewhat pivotal for us. Value low from yesterday, somewhat pivotal for us to see if we can find some continuation to the downside. Is there repair? Very narrow, very small volume here, high volume node to high volume node. We've already kind of checked this high volume node to this high volume node. If we come back down, perhaps some review, repair potential down in that level. All right, I was so in such a hurry to get to the nat gas. Let's get to it. So here was what we thought might be an island low. The market opened above weekly kickoff high yesterday and then drove higher to close this gap, but it left the gap in regular trading hours. So the gap to and the gap from creates the island bottom in this case. Okay, that can be a powerful reversal pattern, but it just didn't happen yesterday. We got to make sure that we keep that gap open from here to the range from early yesterday in order for that to ring true. We lost 6,300 in open interest yesterday, so a little bit of disillusionment perhaps from some late to the party longs, which I was one of yesterday, but I didn't get hurt because that $4 inflection level, weekly kickoff level, saved me from that. So it's important to be able to find these levels to trade close to because it's not going to cost you much. Open interest, well, we're starting to enter rollover. Okay, a week from Thursday, I think, is switch day for the natural gas. So we're coming into rollover, which is going to blur some of that open interest information and perhaps keep this market a little bit more range bound. But we've got, weekly kickoff levels, and we've got the high and low from last week relative to our extremes now. Take a look at this 30-minute chart. So here's the gap. Okay, does the gap come here or does the gap come here? Debatable. So here's where we opened yesterday. We opened with a gap. The market tries to push higher. The opening 30-minute bar traded exactly to $4. That was my entry. I'm like, oh, God, this is just beautiful. This is wonderful. The market continues to try and push higher. It fails to do so. Takes out the weekly kickoff high, which goes from long to short. When we catch this, at least maybe part of this move to the downside. So this move to the downside was very substantial. This was a swift rejection of the potential for the gap for the island low. Pow. So what does that mean? Well, we took out 2 points of control. Looks like we may have taken out another point of control to the downside here, but it just puts us back into the range-bound activity, which seems to make sense because of rollover. Just because of rollover. So the market opens outside of range, back inside value, acceptance of value. We could see this market recover a lot of those losses from yesterday, but it doesn't change the fact that we've wrecked our island low and coming into rollover, thinking between weekly kickoff high and low and last week's high and low, we're in short time frame control and we're going to be looking for those levels. The most important short time frame reference or nuance that I'm looking at right now in this market is value area special situation play. If we reaccept inside value from yesterday, good probability that we may see this market move higher, even test all the way to value area high from yesterday. But this was a very emotional day, very toothy, very emotional, a lot of potential repair in yesterday's value area if we do accept inside of it. Yes, should have a cup of coffee. Let's go back and check on what's going on with crude. So now we got both sides. No more depending on the opening range trade for crude oil. We looked lower. We took out the high. We looked higher, looking more like range-bound activity. Okay, we still have this gap, which if we can't close it, we're looking for opportunities to sell. Because again, that creates an island top. If we close the gap in regular trading hours, island top no longer is valid. All right. Well, that was interesting.
That was interesting.
You're right,
Jerry. I need a cup of coffee. I'm going to have some right now.
Mirek,
how to trade this?
If you have
an island top that works,
the way to trade it is to look for opportunities to sell strength. An island bottom is the opposite. You look for opportunities to buy weakness. There's no right or wrong way to try and trade it. It's all about market. Sorry, I seem to forget that a lot. Echo. Sorry about that. So how to trade this? Again, it's more of a context tool than an absolute level or finite price to look for those opportunities. It's more of a context tool. And yesterday, we had a potential island bottom in the natural gas, and it didn't play out. Well, if you're looking to hypothesize a way to get into it, you've got to also hypothesize what can happen if it doesn't play. Yesterday in the natural gas, we had a wonderful spot, that weekly kickoff level that we were looking for longer, stronger traders to adjust inventory. They just did not come in as buyers there. It just didn't happen. So when the market took out that level, that should have been enough to tell us, hey, this ain't working out. We're out, or even to look to the opposite direction in that case. So if we do have an island top in the S&Ps and the Nasdaq and the crude oil and those island tops remain, we're going to be looking for opportunities to sell the market when it's showing strength. It's always best to sell strength in a down market and buy weakness in an up market. Why are metals tanking with a bad PPI number? Who knows? The gold has been much maligned, it seems, as a store of value. The dollar index is coming back off of its lows from the session since that 730 number came out. It's very difficult to know. But boy, we are certainly seeing some continuation and acceptance below that 1770 number. But remember, acceptance is subjective. I mean, we could look for a daily close below that level to really show a potential mark of acceptance. It's always a risk. Simple as that. You gotta try and find good trade locations to manage risk. The crude situation. I mean, this market opened in range below value. Were we looking for this move to the downside? No. The opening range ended up being the high of the session. If you took the trade, you had to be pretty quick to not make money or some good money on this move. It's been a very directional move, and we can all sit and try and postulate why it's doing that or how it's doing that or who's doing it. It's more of a situation where we are we're looking for opportunities to get into the move while managing risk as well. So we get back up to 1770. That's that important inflection level that I'm looking at as a level that longer time frame traders are going to protect or become magnetic to. So we get a pullback up to that 1770 level. It offers that cheap opportunity. There's no guarantees of a trade that's going to win, but at the very least, we have a level with which we can lean on, and we can limit the risk on. So, all right, what time have we got here? All right, we got about 8 minutes before the open. I'm going to take my deep breath. I'm going to remind myself to stay humble. The market's the boss. Creative. There may be information that might come at me on the fly. I got to be able to accept that. And grateful. I'm grateful that we have the opportunities that we have in these markets, and I'm grateful for having all of you join me in the morning. So on that note, I'm going to run down to the proverbial pit. I'll see you there in a couple of minutes. Get out there and profit. Trade well today. We'll see you for the Coach's Playbook at 11:30. Have a great trading day. We'll see you then.